thrill. This is an honor. We're going to do another long-form interview series. You see my guest on the screen, Mr. Fibo Swanny, Texas West Trading Academy. Fibo is awesome. This dude's been in the game. This gentleman's been doing this for a long time. And I'm really looking forward to the interview and the conversation with him. Hopefully, I'm going to learn a lot. I'm, of course, Big Cheds on Twitter. You can find me there. I'm on YouTube at Cheds Trading. This is going to go into the long-form interview series playlist. I've been trying to, get these conversations going. Recently, I have many new guests, and I have more coming. Wonderful conversations. So make sure you check that out. And just real quick, the Trading Encyclopedia playlist, 3-minute videos every day teaching you professional technical analysis for free. Go ahead and check that out. I am on Bitcoin Live as well as a founding analyst. So without further ado, we're not here for that. We're here for Fibo Swanny. Let's get right into the interview and let's have some fun. And here we are, next guest, Mr. Fibo Swanny. I've been friends with Fibo for a while, and he does some really great work, so I'm excited to bring him on as another great addition. But you folks, they might not be aware, Fibo, of who you are and kind of what your deal is. You want to give us just like a real brief intro? What's going on?
Yeah. I can break that down.
Break it down.
Yeah. Thanks, Jeds, for having me. This will be fun. Little relaxing, little chat.
Yeah.
But for me, I've been mainly a commodity trader and futures and options trader for a couple of decades. I've still got the full-time job in the corporate space, and I'm there because I love my job because I get to do tech. I'm the head technical analyst for an energy consulting firm, and I've been there for about 20 years. And prior to that, I was in cattle and grains is where I cut my teeth in technical analysis. I kind of fell into a job hedging a rotating inventory of cattle. So with the cattle and then the grains for the feed, I used the futures and options market to hedge the revolving inventory. That was kind of my first job out of college. I kind of landed into a really nice trading job and loved it. And that's where I didn't really know much about technical analysis at the time because I was a finance major in college. Mm-hmm. And in finance, they basically have one chapter in the finance books that says everything is voodoo and tea leaves and don't look at technical analysis because it's terrible. But I'm old, and I think that has changed. I think behavioral analysis is probably what it's under a big umbrella now in college, that you're trying to measure behavior. And that's basically what I do. But it was the talking to the traders on the floor up in Chicago with the grain market and the cattle pits. This is back when people were shouting and throwing papers at each other. So that's kind of where I learned from them, especially in the grains market. It was they were using a lot of technical analysis, and I'm like, well, show me the ropes here and give me some insights, and that's where I fell in love with it. I was like, this is right up my alley. I want to just measure psychology, and I've been doing that ever since, and that's what I do at work. That's what I do in the crypto space on the side. I'm really here trying to pay it forward. I've been doing this for so long. You get that wisdom. I think you're doing the same thing. It's like you get all of this stuff in your head and you got all that knowledge and experience. And I'm like, I think it's a general, like, it's like the next step that a lot of people take. I feel like the education and helping others, I get more out of that than I do trading anymore, because trading's boring. If you're sitting around trading all the time, it's boring. I think it's better to kind of like get a group together, get a community built up, and just kind of share ideas and learn from each other. But that's where I'm at. I've just been doing it for a long time, and technical analysis and Fibonacci is the rabbit hole I've been down for many, many years. And I've really kind of grasped that as something that I kind of really understand, I guess. And it just comes to me a little easier. Yeah. And I've just been kind of diving into that for many years to build up systems and ways to attack markets and all that kind of stuff.
So I forgot to ask earlier, would you be able to show us the screen later? Do you have that prepared and you
Yeah,
can
yeah,
kind of,
I can pull up
because I
stuff.
was hoping, and I'm really sorry I forgot to mention, I was hoping you can do like some fib basics too, because you're the guy I have in mind. And
Yeah,
not
yeah,
right now,
yeah,
just to kind
yeah,
of
yeah,
plant that seed.
no problem.
I was
Eh,
gonna
eh,
say, Phil, but when trading's boring, why don't you just drop to a 1 minute chart? I mean, you can find something there, right?
no, I meant boring as in all by myself, just sitting around
Ah,
doing nothing. No,
well, I'm
like,
just
no,
kidding. I'm just kidding
oh.
because that's what some people do. They go 5 minute, 2 minute, and they think they found,
No, I actually like to hold on to my capital, so I
yeah.
don't do that because I've never figured out how to do those really short time frames and be
Me
consistent.
neither. I
So
wanted to ask
so
you,
swing trading is where I live.
swing trading. Okay,
Yeah.
well, I definitely want to get into that, but I'm curious. Well, what kind of TA were those traders on the floor in Chicago doing? Like those early days when you said they kind of like, what were they doing?
Oh, the early days. I the main thing was they use Bollinger Bands a lot.
Okay.
And I've met John a couple of times.
Oh, really?
Um, yeah, just at conferences and
Okay.
things like that. But they use that a lot, and just the basics.
Hmm.
Trend lines, moving averages,
Okay.
Bollinger Bands to measure the volatility around the
Hmm.
mean, those kind of things. Uh, it was just the basics, but it got me enough into it that I could start digging into a lot of different things that I like. And that's what I advise a lot of people is really it's such a large umbrella of what technical analysis is. So you really want to find what really fits your personality. And
Mm.
and
Mm.
everybody has a different way of doing it. I follow your stuff when it comes to all the different candle types or candle patterns. I mean, I'm not an expert in it. I know enough to
Sure.
be dangerous, but when
Yeah.
somebody really knows how they're looking at the psychology of those candle patterns, it
Yeah.
helps, and everybody I think has their niche and
Hmm.
and and they go with it, and that way they can help people that way. So
It's
yeah, it was
interesting.
basics.
Basic. So it's
Yeah.
interesting, Fibbo, that like you found a job in TA right away, which is really, really cool. And it was originally voodoo, right? But like you said,
Yeah.
behavioral psychology and all that stuff. And now it's mainstream, right? Like every, major firm has some TA and it's okay now to admit you're doing TA. Like you don't
Mhm.
have to do it in the back alleys,
Yeah.
anymore.
Yep. Oh, I'm with you, man. I mean, it took me years to build up trust.
Yeah.
When I first started, it was everybody just looked at me like I was a moron. And I'm like, what? Like, why are you looking at this stuff? And I'm like, I don't know what to tell you, but I started, watching those people in the pits, and there wasn't a trader one that did not use technical analysis and uses because the way I look at it is, I don't want to diss fundamental analysis. There's a spot for it. I don't need it, but other people might.
Right.
But you can do all the fundamental analysis that you want, but what fundamental models don't capture is momentum and trend. And,
Mm,
and I think the technical analysis is a
mm,
good tool to
mm.
fill that void. And then
Yeah.
vice versa. Technical analysis isn't going to measure the supply and demand of a natural gas market.
Right.
There's an ebb and flow there. So, and that's why we're kind of set up that way where I do my technical analysis, I figure out what the fundamental guys are doing. And if they
Hmm.
match up, then that's
Yeah.
even more confidence. And if they don't, then you arm wrestle and figure out who's weighing out better than others
Yeah.
and that kind of thing. But um, I think there's a spot for both, but I'm more on the TA side,
So
of course.
commodities like crypto, right? So how did like all the skills that you used way before Bitcoin, right? Like did that apply pretty well to the digital gold,
Yep,
Bitcoin?
it absolutely works exactly the same. No matter what market you're in,
Hmm.
when it comes to uh, just the behavior of fear and greed is
Hmm.
basically what we're trying to measure, and which
Mm.
side has a little more strength than the other.
Hmm.
I don't. It doesn't matter what market you're in. It's more about anything that's exchange traded to the point where there's humans that are trading it back and forth, and even if
Mm.
it's algorithms or whatever,
Yeah.
it all boils down to the fear and greed in the market. So
People say that oh, you can't do TA on Bitcoin, it's manipulated or whatever. But aren't, commodities, they have their own manipulation as well, just like
mhm.
anything, right? Humans tinker with it, and they
Yeah,
try to
yeah.
get
The
an
way the
edge.
way I handle that is I basically analyze every market completely separate.
Okay.
So if I'm looking even time frames,
Yeah.
I'll even do that separately because I feel that at least what I've found in the past is no matter what market you're looking at, there's a set of psychology that's in that market. Like the buyers and sellers that are in a cattle market or a grain market is going to be a completely different psychology than in a Bitcoin or an Ethereum market. And even Bitcoin and other cryptos that are out there and separate cryptos. I want to look at all of them separately because the buyers and sellers that are in that group have a whole different sense of psychology of what's happening in that realm. So I always do. It's more time consuming and more work to be done because I don't do anything on spreads. I do everything completely separate. So I'm looking at all these different markets and I want to measure the psychology that's happening in that market. And that time frame and everything that's going on. So that's how I approach it.
I like that system. I think it's a good way to reduce noise. You have to reduce noise somehow, right? You can't just do everything all at once and then you get overwhelmed because there's so much information you can take in, right?
Yep.
So let's see. So Peter Brandt, he did a lot of that, like cattle stuff and future stuff, and he's into crypto and everything else. And it's good to see he's not the only one. There's other folks like you and him. You said you met John Bollinger at some of these events. He seems like a good guy. What's his deal?
I think I don't know. I think he's a chill dude. He loves IPAs, I'll tell you that.
Okay. There you go.
Yeah, this is these are just casual meets. I don't know him real super personal, but good guy. I talked to him a little bit on X here and there.
Good.
I've just ran questions by him, just just being traders. We meet up at conferences from the designation. I have the CMT and the CFTE designation. So
you got the full CMT. You did full CMT Fibo?
Yeah. I've done all those in the past.
Oh, look at you! Good job, brother.
Yeah. I did those probably like early 2010, 2012, somewhere around there. I can't remember.
Okay.
I did it mainly just to get more credibility at work since I'm the head TA guy in our department.
Right.
I did it mainly for that, but I mean, definitely a good learning experience when you want to get to that classical, traditional type of TA down, which I still think works really, really well.
Yeah. So is your style? It's fibs, right? Maybe we'll start to get your screen up if you don't mind, because I really want you to dig in.
Yeah.
And I'll keep talking while you get that going. But
let me find it here.
So let's see. So Elliott waves, right? I know you use fibs. You use Elliott waves too a lot. They kind of tend to go, hand in hand. Those two. Is that is that a good description? A little bit of your style is Elliott waves and fibs, or
Elliott wave is definitely something that I use kind of in the background. Screen here. I think we're going here. There we go.
Yeah, I'm sorry. I totally I had in my mind. I totally forgot. Boom.
Yeah, I mean this is just BTC on the 4 hour. If you there's a lot on this chart, so I can kind of explain how I kind of look at things.
Yeah, I'd love to hear about it. Yeah.
The basically when it came down to Fibonacci, and all the years I've been doing this, I wanted to find basically kind of a simple way to kind of dive into the market. And I wanted to use kind of the old school indicators. I use an RSI, I use an ADX, and really just the rest of it's just going to be Fibonacci and trend line breaks. And I mean, I know a lot of people aren't fans of trend lines on a diagonal basis. I mean, horizontals are great and I love them, but I also like the diagonals too.
Yeah.
And I use them as kind of these kind of a background to say if this is breaking when psychology is kind of changing, and I'll get into that here in a second. But the main thing I do when it comes to my stuff is down in the RSI area, and a lot of people use the RSI for overbought and oversold, which is great.
Sure.
And a lot of people use the 70 and 30 range and all that kind of stuff. You know, if it gets up above 70, it's getting overbought. And if it drops back below, it might be a sell signal and vice versa, you
Sure.
know, under 30 and back up, that kind of stuff. Nothing wrong with that. You could probably do pretty well with it if you use other indicators to help, you know, behind
Yeah.
it. Just don't use one indicator by itself. You might get hosed. But the what I do is I went back and I look back historically, and I'm looking for psychology changes, because to me, I actually put this on a slideshow back here. I'll show you all the way at the back.
Ooh.
In the book I'm writing.
Ooh, a book. Here we go.
No, there's thresholds that are in the market, and this is just an excerpt of part of my book.
Okay.
And one of them is called The Nature of a Threshold, because when I'm looking at the RSI, I'm trying to find that threshold of when the psychology is changing, because I'm all about social mood. I'm trying to measure the big major, you know, sentiment switches in the market. So to me, I put up this excerpt, like, a threshold to me is not just a price level. It's that point where the psychology changes for me. And that's what I'm using the RSI zones for. So I'll go back in history and find, you know, good Fibonacci and trend line breaks that match up, and find these areas that get into this period of consolidation, which I kind of talk about, like, I call them liminal space. It's that space where emotions get really, really high and people really don't know what to do. And I'm using some indicators to measure who's going to be winning that fight of breaking out. Are they going to jump over that threshold and get above the line? Like I said here, above the line, people start to believe, and then below the line, people start to despair. So on the side of the gate, patience, and on the other side is frenzy, because right now you're kind of patient and you're waiting for it to break out, and if people jump over the threshold, then it starts off to the races. So a lot of people talk about support and resistance, and I look at those as just coordinates on a chart. I call them scaffolding, you know, kind of this buildup, right?
Yeah.
But to me, a threshold's a little bit different, because it's a moment when that coordinate matters to the crowd's identity. It's more of like what's going on behind the scenes. I know it's a little weird and probably a little like, woo, there's a little out there, but
Well, I mean, just simply, Fibble, like psychologically being above 100K, right? These big levels, right? Yeah.
Exactly. So I put, traders don't really care if the candles close one tick higher or lower. Maybe some do, but what they care about is whether that movement confirms or denies the story they are telling themselves.
The story.
Yeah, and it's all about the emotion that's in your mind. So markets don't move because of ticks; they move because of mind shifts, and I'm just taking all of that I've learned from everything over the years and just kind of put it in book form, and just kind of get my whole Fibonacci threshold theory that I use in a book form. So when I say all of that, when you look down in here, I got these bull and bear zones. And when they go from one zone to the other, and every asset in every different time frame is going to have different zones. So it takes that historical analysis, and that's where my expertise kind of comes in, is trying to find those really good, strong changes in the market. So what we did here on the bear zone right here, it clicked down into the bear zone on the RSI, and I won't go into all the details, but I put in this vertical line here of saying this is where the actual psychology flip happens for me, since it went into the bear zone. And for me, I start my Fibonacci from that point. Now, I know nobody else in the world, I think, is even doing that, because that's a weird spot to start your fib. Now, there's nothing wrong with starting the fibs at the absolute high, absolute low. You can get some really good support and resistance.
Swing high and swing low, right?
Yeah. Swing high, swing lows. Yeah.
Okay.
And then and a lot of people do it. I'll do mine from my threshold breaks. I'll do them from trend line breaks, and it's pretty amazing. And the phenomenon with Fibonacci is so weird to me, because it's something that I've been trying to explain for years, and I still have a hard time doing it. The patterns that I find doing it this way are amazing. It's so crazy. So to me, I think a lot of people are like, well, you got those support and resistance, and everybody's looking at the same number. You got self-fulfilling prophecy. I think there is a bit of that. But then again, if you do some analysis and start digging down into some more time frames, and because everything's fractal in nature, and you look at everything from a minute chart to a yearly chart, and when you look at all these fibs, you're looking at patterns that the surface isn't seeing. So if you do this analysis underneath all these different time frames, it's amazing the patterns that you see that a lot of others aren't seeing. And I think that's where my edge is a little bit, because I'm trying to find those patterns that people are, I guess, I don't know if they're lazy, but they're just not looking beyond the surface. Like look into the indicators, kind of get a read of what the psychology is coming out. It's sort of like what you do with like the candles in the candlestick patterns. There's a lot of psychology that happens in that period.
Yeah.
And you want to measure that. And on the surface, you might see one thing, but if you dig down a little deeper, you might get a little bit more information out of it. So that's how I kind of approach it. But we go into the bear zone here, and I start my fibs. And as the price is coming down, I'll continue to move my fibs down. But I mean, this is a long story, but this previous shallow fib here at 108, 108K. This comes from some way earlier bull zone that we've been in, and every retracement we've had has not broken my previous shallow fib, which move as price makes new highs. The fibs keep raising that what I call shallow fib, and that's that the retracement that comes down to the 38.2% level.
Yeah, that first level.
That first level, and if that holds and continues the trend, the uptrend is usually still pretty strong.
It's a high and tight. It's just a real
high and tight. Yep. I like it. Yeah, high and tight. So the move down to this previous shallow fib here matches what I do is I take trend lines and I'll measure the very furthest distance from the trend line to the trend line itself. And I take that same rate of change from the break point of the trend line. And a lot of times if you get the break here and it comes back up and retests, it came down and then it retests again here as resistance. So all of this is really good. And it leaves this target open that matched up pretty closely to my 108. And this was a buy target for me, which finally got down here and tested right here, tested a few times right here, and got bought back in here while we're in the bear zone. And then we went back the other way, and then we broke this trend line to the upside, went up, came back down and retested, and we went into the bull zone. On this movement to the downside here on the trend line, it held the bull zone and didn't go back into the bear zone, and then started to pop back up. So we got to buy in. We got to buy down in here. We got to buy at the break here. You take that average, and then we got some take profit targets on the upside. First one's going to be the trend line break. The next one's going to be my threshold resistance there at 118.6. And then what I do is I use the fib extensions. I'm a big 127 to 141% level. Is that first line of defense of any trend that's trying to break out above a previous high. Like if it breaks this 100% right here, that's that first level that I would look at to say that's going to be the spot that we want to either take profit, because that's that first line of defense to possibly hold it from going and then retracing back. But then again, if you sell into it and the trend's really strong and you continue, I'll buy it when it breaks back above the 141. And I'm always on a 3-day rule or a 3-period rule.
What does that mean exactly?
I always look for a 3 periods. So if this is a 4 hour, so if the market rallied up to that 123 on the 141% level, and I took profit at the 122 and it got up to 123 and it broke above it, and it had 3 4-hour candles above it, I would get back into the market long.
Oh, because it's like your confirmation method. It's 3 candles.
Yeah, it's my confirmation method of kind of the psychology, because any line on a chart like the horizontal support and resistance or a trend line or anything, I look at it as trench warfare, right?
Yeah.
There's a whole bunch of, like, if we got up to that 123, there's going to be a whole bunch of sellers that are in that trench.
Yeah.
And they want to fight the buyers of not going any further.
Yeah.
But if the buyers are getting enough strength and they push through, even though it trades above it that first time, there's still fights going on like, do the buyers have enough? Are the sellers throwing out a few? They're throwing out a few troops, right?
Yeah.
Hey, try it out. Yeah. Try to get them. And
interesting.
And to me, I've done some. I think 2-day rule or a 2-period rule works too. But I like the 3-period. It works better for what I do and my stuff. Because I look back historically, and it must be a psychology thing of like if it gets to that point where like you get that first test, you get that second test, and people are like they're getting a little bit more antsy, and then maybe it's that third one and like, okay, forget it, it's broken, I'm getting out, and then all of a sudden people are starting to go the other direction.
Mm-hmm.
And it kind of takes a couple of days to kind of break through, seeing who's going to win that fight. And the 2-period rule works, but the 3-period is a little bit more conservative, and I kind of tend to go a little bit more conservative in my stuff. So I know this is all weird.
No, this is great.
Crazy stuff, but
no, I have so many questions. I have so many questions, Fibo.
Go for it.
It's funny. I feel like I know a lot, and then I just there's so many different methods, and then I listen to you, and I'm like, man, this guy, there's so much more to learn. So okay, 3-period rule, 4-hour, but why not just use one daily close? Isn't that more conservative than 3-4 hour?
Yeah, I mean, I guess you could do it that way, but I actually on my daily, I'll actually look for 3 daily settlements.
Okay, so it's 3 regardless of time
and then
frame.
if you're on a weekly, it's 3 weekly because
okay.
I know because the week is a little bit more longer term. I use the 3-period rule on no matter what time frame.
I like that.
That's just my way of conservatively just saying, okay, now the break. It just gives me a little bit more confidence, eases my emotions, which is the whole goal of all of this, is to maintain your emotions. But
do you journal and stuff? I mean, you've been doing it a long time.
I used to. I used to a lot. And that's one section I actually have in my book that talks about journaling and what to journal and how to journal based on how I approach it. I'm sure there's many different ways, but that it's definitely something that I think that a lot of new traders and even OGs, every once in a while, if you start getting, kind of, because you always got to be maintaining your stuff because markets change, psychology changes, and sometimes it might get to a point where like, hey, things just aren't working right, and I'll go back to like that kind of the old school journaling, and it really helps to know where your head's at and what emotion you're going through at the time and why you're doing the trade and all of that, and I think that really helps. So I'm a big advocate of that especially for new traders.
How do you use the 3-day rule? How else are you kind of checking your own emotions? I mean, we're humans, right? So we've got ups and downs, right?
Yeah, that's always a tough one. But I think experience really comes into play. You start to learn. I don't know how to explain it. I think it's just more of an experience thing that you kind of learn. I mean, I think not everyone, but a lot of people, or the majority, go through the early stages of just getting your ass handed to you. You know what I mean? And I think if that happens enough, for one, you're probably going to be out of the market for a long time, or you're gonna sit back and you're gonna learn from it. You're gonna be like, okay, what's going on? Why am I losing? What's happening here? And I think it's just trial and error, experience, those kind of things. I really don't know how to. My group, my trading group, always gets at me like, why are you not nervous? I'm like, I just follow the plan. I mean, that's
awesome.
I got a plan in place, and if it fails, it fails. I mean, the whole goal is to get the losses really low, and don't take large drawdowns and ride the trend. I mean, it's just if you consistently can do that. And I'm boring. I'm not this guy that's like get rich quick and all this. I'm a small percentage gain over time. If I take 2 or 3% here and there over time, it adds up. It's called compounding.
I like it. I like it.
Yeah.
So what's this said trading group? It's the Texas West group. Do you want to talk about that for a second, or what's that all about?
Yeah. I mean, I do this on the side because my day job takes a lot of time. But what I did was I did it on my own on a Patreon for a long time, and I was just like, oh, this is not. I just don't like this. So I got talking with Christopher Inks over at Texas West Capital, and we had a really good mindset together. We trade well together. Mm-hmm. And I said,
you both have a beard, right? You guys both have beards.
Yeah, we both have beards. This is a little bit more, substantial than mine, but I moved my stuff over with him, and he's got the whole gamut of everything, when it comes to like Elliott Wave and Wyckoff and all these different trading things. And
Yeah.
it's more of his house. I just got a little bit of a Fibonacci wing in his house.
Oh, okay.
So if people want my stuff, I have a group over there that if you want to learn more about fibs, or if you want to learn more about what I do, that kind of thing. It's a fun little community that I've been in for years. I got a lot of OGs in there with me.
Really?
Yeah, it's pretty fun. It's sort of like what I was talking about earlier. It's like that pay it forward kind of thing.
Yeah.
I just want to build a community of people that really want to learn and just dig in. I learn from. They challenge me all the time. They're like, why don't you look at it like this or like this? And it's kind of cool because I'm learning from them, even though I've been doing this for 25 years. I'm learning from them. Hopefully they're learning from me. I don't want them to mirror my stuff.
Right.
I'd rather them take what I do and just, build it better for yourself, and that's what a lot of people have done, to be honest. They kind of like meld kind of my Fibonacci thinking into what their thinking is, and they come up with their own deal. So I think it's kind of cool. So that's what I like about the community is just the learning from each other, and it makes it less boring than just sitting at home trading yourself.
It really does. It's good to have a little group, and they'll keep you on your toes.
Exactly.
I have so many questions. I wonder, you said take profit at the whatever, is the 122. Are you taking full profit? Like, are you taking partial profit and then you're re-entering if it continues? Like, what is that? How's that work?
Yeah. When I basically what I do, just to keep it kind of simple, is I trade in buckets.
Okay.
I got capital buckets for different assets. So like for BTC on the 4 hour, I actually have a capital bucket of money that I have in there.
Interesting.
So whenever it hits a buy target, like down at the 108K, when I bought that, I buy 10% of the capital that's in that. So if I have $100,000 sitting in that account, I'll buy $10,000 worth of BTC at 108K.
Or spot futures?
I am all spot in crypto. I don't do any leverage in crypto at all.
Boo.
I know that's weird, but I do the futures markets for my leverage. So so whenever I'm just trading Bitcoin or trading Ethereum or any other shitcoin, I'm really in it for basically just I lost my train of thought there for a second.
Futures for your leverage, yeah.
I use the futures market for leverage. I do spot on everything else. I know that's boring, but
no, it's okay.
it keeps me afloat. Put it that way. I don't get liquidated like I hear every other day. So that's the way I kind of approach it. Is just staying away from being liquidated. So what I'll do is I'll buy 10% of that capital, and then I'll buy another 10%. So I'll do 10% tranches, and then every take profit target I'm selling 10%. So I'm getting in at 10%. I'm getting out at 10%. So right now my first thing is 108 right here. I don't have this target. This is just a guideline. So if anybody wants to take some early target at 116.9, but the 108 that I bought here, my first target is at 118.650, or basically 118.6. So I'll buy 10% and then I'll sell 10% there. Now it won't be the biggest gain in the world, but those small gains over time. So as your account builds up, that 10% becomes a larger amount when you start buying, if you start increasing over time. Hopefully, there are some times when it gets a little less, but that's trading, and sometimes you're on the downside and work your way back the other way. So that's how I do it. It's kind of boring, but that's how I do it.
I like boring, but Fibo, how are you managing your stops? Right, like you buy at 108. What's your, how are you protecting that capital? What are you doing?
In this case, this is a weird example, but most of the time is when it breaks back down into the bear zone. That's my sell signal. So my stop is breaking from one zone to the next. So
in the RSI.
On the RSI, yeah. So
interesting. Not the price. The RSI is triggering a stop for you.
Yep. I have a little box over here that I use to let me know where the price is so for the bear zone to hit, it'll hit at 108.7. So right now, even if I bought it at 108 and it comes down and breaks back down into the 108.7, I'm still above. It's almost a break even, right?
Yeah.
So that's kind of the goal, is like reduce your losses, but keep continuing to ride the trend. So even though it dipped right here, back down to 1091 or so, and it stayed in the bull zone, I didn't get stopped out, so I'm still on my longs, and I'm still riding it to the upside. So as long as it wants to stay in that bull zone, I'll just continue to ride the trend and take profit at those upside levels.
Interesting.
Yeah.
You said use ADX, right? The average directional index, and that just tells you if you have a trend, how strong it is, right? Not the direction of the trend. Is that the general
Correct.
gist?
Yeah. The black line here is the actual ADX line,
Mm-hmm.
and yeah, that's the line that measures the trend strength.
Mm-hmm.
And then the directional index lines with, the
It's
green
EMA, right?
positive. Yeah. What now?
It's the EMA of the ADX, basically, right?
Yeah. Basically, yeah. So there's a green positive directional index and a red negative directional index.
Yeah.
So basically, whatever one's elevated above the other, the ADX is going to measure the trend strength for that, whatever that near term trend is.
Mm-hmm.
But for the ADX, I only really use it to measure where I start my fibs from one zone to the next. So I won't have to go into a whole bunch of detail, but I basically use it for finding. It helps me pinpoint the psychology change a little closer in the market. So even though the RSI dips down into a zone from one to the other, the ADX is kind of my fine tuning of where to start my fib, because it's not necessarily always right at the RSI break. It might be a little bit earlier than that. And then I'll start my fib from measuring where the ADX is. And there's some steps in it. I don't want to go into detail, but there's some steps into the ADX that I use as since it's a trend momentum indicator.
Yeah.
I'm using that to figure out where that actual change happened, along with the RSI. So they work together when it goes from one zone to the next. I use that for measurement.
So I see no moving averages. Is that correct? You're not a...
I do, and on and off. I got some Bollinger Bands on here that I look at. I got a 55 on here, and a 21 that for some reason doesn't want to come up. There they are. So I use I use some of that. So I use them as looking for confluence and stuff like that. So not so much that I put them on the chart all the time. I try to keep my charts as clean as I can, for my group, so that people don't get all confused.
Can you give us like a clean look at the weekly? I'd be really curious to see your thoughts on the Bitcoin, if you don't mind.
Yeah, no problem.
And the retracements, the consolidations we've had towards the weekly 50. We're kind of maybe doing the third push towards one now. I'm curious to see generally what you think of the bigger picture, so I can get a sense. I see you have, the 4 hour and you're trading their momentum, but that's zoomed in a little bit, right? I would love to hear your bigger picture view.
Yeah. This is my weekly when it comes to the zones.
Okay.
Yeah, we went into the bull zone back on January of 23.
Yeah, we did, brother.
Yep. Really good buy day down in here. I'll tell you that. That was fun.
Can we go back? Can I get a time machine and go back?
Yeah. Please do.
Oh.
But this is where we're at. First thing I had was the break of the trend line here.
Sorry to
I had that
interrupt.
as a
This is
target.
linear, right? Linear. You're on linear or log? Looks like linear.
I am on a log chart, but my fibs are always linear. I know that some people use the log fibs with no problem with that at all. Yes. It just doesn't fit my system. My system
Sorry to
uses.
interrupt.
No worries. I get that question a lot because a lot of people are using the log on the fibs, and nothing wrong with it. It just doesn't fit what I do. Because for me, it's all about proportion and it's not about price. So I'm using the fibs as a proportion, and I want to keep that proportion linear. And to me, it helps figure out where those psychology changes are for me. So that's where it kind of comes from. But log chart always, unless I'm looking at like some way out long-term chart, I might use a linear for some reason, but log chart, but linear fibs. So on the trend line break here, it matched up pretty well with the 61.8% level here. That was just from the high to the low here. That's what I'm measuring. and it matched up pretty well. And that was going to be that first area to look for. And we got a nice little run up here, a little period of consolidation, ran up to this point, and it hit the trend line break exactly right here on this candle. Then came back down and then popped back up, and then it worked its way down and then hit it as support. So this level right here off this trend line break was pretty amazing.
49,
which gave us we definitely had some buying all the way up here, because the way I do my fib, like, let me get back to the where the fibs are right now. Let me pull down the if you start on where I start my fibs here. What I'm doing is when this goes up and makes a high right here, it comes down to the 38.2% level. It's another buy for me. And then unless we go back into the bear zone, which it never did. So you're buying, and then I keep moving my fibs up. So and every time it makes a new high and comes back down and hits the 38.2, I buy it. Now it hit the 61.8% level a few times. So historically that could happen, but the 38.2% level is better for me, because if that hits and holds, it's stronger going forward.
Right.
It's, like you said, it's a tightness that
high and tight. And trends tend to continue. People bet against them. You're betting that the trend will continue is what you're doing.
Yeah, exactly. And then I'll just keep moving the fibs up, and then I'll keep looking. It didn't hit here, but it's a good guideline that the 38.2 held.
Okay.
And then I just keep moving up, and it went up to here, hit the 38.2% level, move it up again, up to the high right here. Got down to the 38.2%.
Yeah, look how clean that is. That just shows how clean it's been, man.
Clean as all get out. It's crazy. And then now we're up at this point. Now the shallow fib is at 85.
85. Okay.
Now I don't think that'll happen unless we get into the bear zone, which is at 93.5. So to me, my line in the sand is 93.5 on the downside. If it breaks that, then we're probably going to 85 pretty easily.
Well, that's not that bad a move down, 93 to 85.
No.
Wouldn't it mean more of a significant trend change? Because look how much it's gained since it entered the bull zone, right? Wouldn't it maybe mean more?
It definitely could mean more. That's why this bear zone at 93.5, if that actually hits, that could be pretty bad. Because like when the bear zone hit here, as you can see it hitting the bear zone, you get a nice, pretty strong correction.
Absolutely.
So that's why I got this other trend line down here, just to have a sort of a guideline. But I'll go to the drawing board if it hits the bear zone. I'll figure out where the next zones are. But if it got down in there, it might get all the way down to 60, maybe even 75, somewhere right around there. I don't know off the top of my head, because I haven't done the analysis on that. Because right now it's still kind of holding. And the other thing I was looking at was the one thing I talked about was the 127 to 141. So when it made a new high here, 83 to 91 was that zone that I wanted to watch. And it broke above it, and then it came back down, and it really tested a bunch right here. But it never got the 3 weekly settlements consecutively. It got 1 and then went back up, and then it went 2 and then went back up. So it definitely held for a longer term purpose.
I see.
And then it went back up. So once this breaks the 141%, I put the 200% as your target. 200. And that target was after the support held, my next target hit, and then we hit right there and took profit. And then we're back down at this 109, which is his previous high. Because once you make the high here at 109, you got the 118 to 123 zone that hit, and now we're back down to this 100%, and that's why I'm buying, because based on here, it's going into the bull zone and holding this level here at 108.
I see.
Which helps determine that we should be starting to go back to the upside. So 144, once we get back above to a new high, and we get 3 weekly settlements above 123. 144 will be that next target for me. So that's basically how my weekly looks. It's clean, dude, and it's amazing. And this is the patterns that I'm kind of talking about from. Just do some analysis with fibs. It's really interesting on the patterns you'll find that on these little shallow movements to the downside. It's amazing how you find this buying interest on all these different time frames that kind of, if you're looking at the 4 hour, the daily, and the weekly, you'll start to see a lot of confluence on different 38.2% levels, measuring from different ways, and that's how that's kind of the pattern recognition that I try to find using fibs. So I know I'm rambling, but that's kind of what it looks like.
No, it makes a lot of sense. It makes a lot of sense. And so I like the multi-time frame analysis. You have the weekly picture, but your 4 hours giving you more confidence there at the that weekly, high and tight, that it's turned. And
yeah, I don't trade the weekly. The weekly is my guideline. I trade the 4 hour and the daily.
Oh, there you go, my man. Yeah, 4 hours so good for Bitcoin. I wonder why. I don't. I wonder why.
Don't know. I don't know, but when it comes to commodities,
tell me,
like in cattle and in energy, like crude and natural gas and all those kind of things, to me, the 4 hour is not as good. It's the daily works better for me on the commodity side of the world when it comes to what I do. So, but like you said, the 4 hour to me is a good swing trade for the commodity market or for the crypto market.
Bitcoin.
Yeah,
crypto to show Bitcoin. So you do find this technique, like you showed us on Bitcoin, is just Ethereum too, no problem, or
that's what I like about technical analysis, because you're just measuring psychology. So as long as you're looking at something that's exchange traded and sort of like here's an example: U.S. power market, like electricity in the United States, is it's so segregated into little areas all over the United States that there's not a central commodity hub for it. So nobody's buying like electricity in Texas in the morning and selling it in the afternoon for profit. There's not a lot of speculators in that type of market. So technical analysis doesn't really work well in those type of environments, at least what I do. It's more of those the commodity level or the crypto level, that main level that's measuring the price of the actual asset. So if you're looking at natural gas or cattle or whatever, you're looking at that asset that's futures traded and has a uniform contract that everyone kind of buys and sells, and you got speculators in there that'll help maintain the market. So that's how that kind of goes. Is it all works as long as it's a market that's traded. Now before I went into crypto, I was I did a lot in the Forex market, which I think technical analysis, that's probably one of the best markets for technical analysis is Forex. So and I think that kind of comes down to the point where if you try to measure like a Forex market, you're trying, what are you trying to do? Measure the GDP of a country? So good luck with that, with all the different variables you got to look at. So that's why I think people look at technical analysis a lot more in those type of markets. You get a lot more information out of technicals than you can fundamentals in those kind of markets. So
Forex is really interesting because you with the like, euro dollar, but then it's like dollar yen, and you could be like, the numerator and denominator. You can switch it around and play different markets. But even with that, I've seen it works really well. The TA I've seen, Yep,
it sure
do you have
does.
any favorite pairs, or
I haven't traded Forex in a long time.
Okay,
that was since I moved over to crypto, about 9 years ago, I think. I kind of did away with the Forex market. The crypto market is enough excitement for me. I don't need both those. And then I just generally just do the futures market for a lot of different commodities, just because that's just my forte.
Well, so gold, like what commodities you into? I mean, you said cattle and stuff. You trade coffee and lumber. I mean, what are you?
Not very often, unless there's like some crazy setup, but gold is my main one. I'll pull up my gold chart real quick.
Oh, you mean the analog gold, not the digital one? I'm making a joke. People call Bitcoin the
no, analog gold. The actual gold futures is what I actually trade. And this is where we're at. Bull zone, kicking ass.
Yeah, it is.
Actually, I just got to move my fibs up. Got a new high right here.
All right.
So in other words, the way I'm approaching this, I'm for one, I'm still long. I'm waiting to get my target, which is at the edge of the fib extension. Since we made
Okay.
the high here,
Yeah.
we actually hit a target for profit at this one, but then we got 3 settles back above it, so I got back
Oh,
long again.
really?
Yeah,
Okay.
it got up to this point, didn't get the target on that run,
Mm-hmm.
but when you make a new high, like it did right here, and it comes back down,
Mm-hmm.
that's a spot to buy because that's
Yeah.
support right there.
Yep.
And then waiting for the target to hit, almost there. So I'm just kind of waiting to see to hit that target.
Mm-hmm.
And then my next target would be the 200% at 38.21 up here.
Mm-hmm.
If once this target hits, hopefully we get a correction back down to the shallow fib,
Yeah.
and then get bought, because the shallow fib's at 35.42 here, and the bear zone's at 35.28. So you can go all the way
Ooh,
down to the shallow fib and maintain your bullish zone. So
interesting.
I'd be buying there, and of course, if you buy down there and it goes into the bear zone, you take a small loss, and then
Yes.
then go back to the drawing board and figure out where you would buy on while in the bear zone, that kind of thing. But yeah, gold is one of the main ones I trade with the group. My main trades are BTC, Ethereum, gold, the dollar, and SPY are my main. The S&P 500 futures.
Sure,
Those are
sure.
my main 5. Like that. Those are, because I try to keep my watch list low. I don't want to
Smart.
look at 10,000 different things.
Smart.
I just go with 5, and I just freaking trade the snot out of
5.
all 5 of it. Yep, 5 different markets.
Only 5. Love it. Because I tell people cut your watch list, to 15, 10 or 15, and you've got 5. I think that's
5.
impressive.
Yeah, and all the cryptos are my spot, and then all the other side is my futures. So I got my leverage on one side and
Yeah.
the spot on the other.
Well, did you ever mess around with any like Solana? You trading like
Oh yeah. Every once in
all
a
that?
while, I'll get in that, because like in my group, a lot of people are asking for a lot of those other charts,
I bet.
and then we'll build the bull and bear zones for those.
Yeah.
Yeah, I'll trade Solana and Cardano and whatever's breaking out on a good bull zone with some momentum
Yes.
behind it. Yeah, I'll jump in them, but I'll get in and out of them,
Yes.
and I won't like watch them constantly.
No.
I'll
That's
get
good.
in here, get out there, that kind of thing. But my main 5 I always really stick to,
Mhm.
and those are the ones I watch and go from there. I think it's good having the group too, because the
Yeah.
group brings up a lot of good ideas, and then when we start looking at charts,
Mhm.
and then we get good setups, and you're like, yeah, this looks good. Let's
Hell yeah.
do it.
So the group, maybe do you get good sentiment read from your group? Like, do they tell you a little bit about the market as well? Do you find that, like,
Yeah, they do. I don't tend to follow that too much.
Okay, okay,
But a lot of people like to talk that,
yeah,
and if they can get good information out of it, then run with it.
okay,
But for me, I'm there's times that people will bring things up that I'm like way out in left field, and I'm like, wow, I never thought of it that way.
yeah.
And that's what's cool. And then I'll start going down the rabbit hole and trying to figure that out and see if I can better my stuff for bringing in different ideas, that kind of stuff.
Have you ever used like Onchain, or what are your thoughts on like Onchain wallet watching and none
Nothing.
of that? Yeah.
Don't care at all. Um,
Okay.
no,
Which is
like,
fair.
again, it's something that other people might get a lot of good information out of.
Right.
I'm all about psychology in the market.
Mm,
I'm measuring
mm.
the fear and greed, and that's it. That fear and greed and the indicators that I follow will let
Yeah,
me know whatever kind of on-chain news there is. It'll let me know if it matters or not.
I like it.
Just in the indicators themselves.
So you've found your style, but you recognize there's other styles. And I think that's the most important point. I really love your 3-day rule too. I think the people watching should pay attention to that, because they probably Fibo, they buy at a level and they think it's support, but they get chopped out pretty quickly,
Mm.
and then it bounces. And if they had just held, you know, that's a great method you have, and that's probably helped you survive a lot of choppy
Oh yeah. Oh,
situations.
definitely. Yeah. If anybody wants to look at the 3-day rule, just pick an asset and just start backtesting a little bit. Just,
Yeah.
you know, just check it out, and you'll be amazed on how much it helps, especially when we looked at that weekly, because a lot of times this is all this chop that's going on right here.
Yeah.
A lot of people were like, "Oh my gosh, we're going to 50K."
Yeah.
You know, like
Yeah.
like it's over, like you know, that kind of thing.
Right.
But for me, it never broke. And now, of course, if it broke, then I would get out and then we
Yeah.
go back to the drawing board. But since it didn't, it filters it out. And if you don't use the 3-day rule, or I always say day by accident, but it's a 3-period rule, whatever
3-period
you're
rule,
looking at. If it doesn't work for you, then find something that does. I mean, if
Yeah.
a 2-period rule works better, then go with that.
I think the 3-day rule is that's a dating rule, right? When you meet a girl, you wait 3 days before.
Before, yeah, there you go. Before texting back or calling.
Yeah, exactly.
There you go.
I want to ask you, and we'll get towards wrapping up. This has just been a treat. What are some of the like new traders? Some of the things maybe you wish you'd known, or some of the things that would be valuable for people who are not experienced and wizened the way you are.
Yeah, we've all been through that though. We were all
Yeah.
beginners at one time.
Yeah.
Actually, what I would, to be honest with you,
Yeah.
I think it was probably a lot easier for me being as old as I am. We didn't have computers and internet and all this other crazy stuff when I first started. So to me, it was probably a lot easier to focus.
Yeah.
You get out on social media and you could just go gangbusters and like, what the hell is going on? I got my whole feed saying it's bullish one day, it's bearish the next. I mean,
I hate that.
My head would just explode. But I think as a new trader, I think getting a mentor of some sort, I think is great. And it doesn't have to be me. It could be anybody. I wish I had something like that when I was younger. I did have my first job, at the cattle industry. I got lucky, and the CFO is the one that did the trading, and he kind of took me under his wing, and I learned a lot from him. And then he left after a year later to take another job. His job split, and I took his side of the trading. So I fell into the sink or swim, like figure it out, or you're not going to be here very much longer. So I just kind of took the years to figure it out. But when I look back, it was really that year of having someone that knew what they were doing, and kind of learn from them. So if you can find someone that you trust, and has really good insights, and wants to be a mentor, and that they're excited about it, and they want to do something to kind of educate people, I think that's a really big thing that people should do getting new into the market, is find a mentor that you could really learn from. And it doesn't have to be a paid group or anything like that. It could be just find somebody that you can really learn from, and they're willing to mentor you too. So that's what I kind of tell people. And then on the other side is, I know trading books are fun to read, but I lean toward psychology books, because I want people to learn more about managing their emotions than they are trading, because anybody could figure out trading over time. Just figure out an indicator, figure out this, figure out that. You can figure that out. You can figure out all these indicators and know exactly how the ADX works and RSI works, but if you don't have your emotions under control, don't matter. That's exact. So I lean people toward psychology type books to learn how to manage your emotion, and then if you get that along with your trading, that's the golden ticket.
Is it like Trading in the Zone or whatever? Are there like psychology books other than Trading Wisdom? Are there trading psychology books?
There is that one. Off the top of my head, I got a couple of them. I'll send them to you, and you can put them
I'd love
in the
to know.
Yeah, I can't remember the names of them off the top of my head. Let me check my bookshelf.
I'm putting you on the spot, man. Putting you on the spot.
I cannot remember the name of a couple of them. I think one of them was called Sway. I think it was.
Okay.
I'll look them up to make sure that I get them right. But there's a couple of them that I like to recommend, and I always forget the names of them because I haven't read them in years.
Sure.
But I'll get it to you.
That's such a smart thing to say, because you can have a great system, but if you're going to foul it up with your emotions,
Oh yeah, for sure. We've all been there, dude. You know how it is. You're like, oh my gosh, I'm getting hit, but yeah, I'll just get in here. It looks good, like good support, and
Yeah.
but it's going against what your indicators are saying. But you're like, well, if I just get
Mm.
here and dollar cost average, I'll be all right. Next thing you know, you're losing more. That
Ooh.
kind of stuff.
The dollar
It
cost average is dangerous, right, Fibby? If it's a downtrend and you're just instead of hitting a stop loss, you just keep adding.
Yeah, it's bad in the point where if you're adding to a losing trade, that's bad.
Right.
Yeah,
Yeah.
that's what you don't want to do. But if you're if it like if I'm in a bear zone on my stuff and
Yeah.
I'm buying into the bear zone and it dips down a little bit further, but it hasn't broken pattern, then adding in that is adding to a system. It's not adding to a losing trade. Now
I
you still
see.
might lose, but
Yeah.
but you're still following your system.
You still have a
Um,
system, yeah.
yeah, because like everything has like rules and guidelines, right? Like in
Yeah.
Elliott Wave, you got like 3 steadfast rules, and then you got a whole bunch of subjective guidelines, right? I think it's the same kind of thing in
Yeah.
any type of thing that you put together. You're going to
Mhm.
have these set rules. I have set rules: RSI first, ADX measures, blah blah blah, and
Mm.
then those are the set rules. But then there's guidelines, experience, uh, knowing how to read markets,
Yeah.
anything like that is that added subjectivity that helps there too. But then again, don't buy into losing trades.
Mm.
Just because then you're just trading on hope. Like I'll buy here and hope that it goes up and I'll get back
Right.
to my number. That you won't be liquid very long,
Really good.
unfortunately.
I love it. This is all really good stuff, man. And you're making me wish I knew my fibs better. I'm looking at your thing and making me wish
There's a lot in the fib world, man. A lot in the fib world.
Yeah. I
Yeah, I
love
gotta
it.
tie. I like to look back at this.
Sure.
Uh, um, I always I always like to look at this, and this is what started me in the rabbit hole.
Okay.
Is the whole Fibonacci spiral, and
Mhm.
then you go into like sunflowers and all the nature. You go to a
Mm.
park, pick up a pine cone. Counterclockwise is 8. Counterclockwise is 13. Octaves in music. Here, a piano. You got 2 black keys, 3 black keys that make up 5. You got 8 white keys that make up 13. So even in music, you're going from one octave to the next using Fibonacci numbers, and then just human nature, based on all the ratios of how we're built.
Yep.
This stepping stone from here into like Elliott Wave, measuring, all that psychology in the market.
Uh-huh.
The whole scenario is if Fibonacci is in nature and we're built on human nature of fear and greed, those
Mm.
patterns should find their ways into the market. And that
Mm.
was like when I first heard that, I'm like, yeah, that's a bunch of BS.
Yeah.
But then when I started to dig in and you
Right.
really do some homework and really dig into it, I'm
Yeah.
like, wow, there's a lot here, and a lot to
Interesting.
learn. But that was that step from like, then it made sense to me. Like if Fibonacci's in nature and it's all about human nature of fear and greed, then there's got to be patterns. I would think though. But
Sure.
I think I'm also on the weird side that people create patterns that they don't even know that they're making. There's conscious patterns,
Yeah.
and then there's subconscious patterns.
Absolutely.
And
Sure.
and to me
Yeah.
that's what keeps me continuing to dig down into the rabbit hole,
Yeah.
is that I'm finding patterns that I wouldn't even know existed. And I'm like, holy crap, that's so cool. And then
Mm.
you're like, all right, now I got to keep digging because that's just too awesome. And that's what got me into the rabbit hole, and I've loved fibs ever since, and I've learned so much from them, of learning psychology in the market. It's just a weird thing, weird phenomenon that I'm still
Mm.
trying to figure out how to explain.
Your passion shows through, man.
Oh,
It
I've
really
been doing it
does.
for a long time, and I love it.
I love to see that. I think there's so many people in our space who get discouraged and maybe even hate what they're doing or what they're trying to do. And so for me, observing you and seeing your passion, I think it's great. Really refreshing, to be honest, man.
Awesome, thanks, man. I see that in you too.
I'm just happy
No,
to be here, brother.
hey, pump out those books, man. You're doing awesome. I love it.
Do you want to tell us about your book project, or is there anything else you want to like talk about before we wrap up here?
No, I mean the book's in early stages, and
Okay.
one of the reasons I left X, was to free up time. It was just
Okay.
more of a time consuming thing, and
Yeah.
if I drop that, then I'll have more time to dedicate myself to, um, putting more time into my book because I have so many notes I'm trying to put together, and it just takes time, and but it's good. It's really all about. I'm trying to tie in a couple of different things. It's not going to be a book that explains exactly how to do my threshold theory, but it's
Yeah.
going to be more of the mindset that you have when you attack certain ways of looking at the market. So you're going to be like I talk about liminal spaces and that liminal space is all that emotion that builds up before people jump over that threshold. Because that's when everything gets all kind of crazy, right? The market got down to 108 and everybody's like, holy shit, what's happening? Oh my God, we're gonna die. Everything's going to but then again, when you get to that level, then you could that's kind of that liminal space that I'm talking about. Now, if they would have jumped over that threshold and went underneath that 108K, then that's a signal. That's like, okay, sentiment's changing. Probably going to go back down to, into the 80s or whatever, or maybe even to the 90s or somewhere around there. But it didn't. And so far it's holding, and that threshold, emotions run high, and they're either going to jump over the threshold or they're going to continue the trend or whatever. And you have to take that and measure that psychology of what's happening at that moment. You're basically trying to measure the emotions of the masses, right?
The tipping point, right? Because there's the social fear that will spread. I mean, there's a boiling point, and then boom, right?
Yep, and boom, calm to frenzy. That's what I like to call it.
Interesting. All right, man, this is awesome. I really appreciate it, man. There's so much I learned, and I'm not just saying that. I'm looking at this. I'm like, man, I need to really. I got to read my textbooks. I got to play around with this stuff, and I like how you made your own RSI zone. Like that's interesting to me, right? That's cool. That's really cool.
It's taken an old school indicator that's really just used for overbought and oversold.
Yeah.
As an indication of psychology change for me. I know it's just a derivative of price,
Sure.
but there are levels within that the RSI does move different from price, with divergences and all that kind of stuff. So I was kind of looking at a bunch of different, and don't get me wrong, I look at other things behind the scenes. This is just my general like model. But yeah, the RSI, that's what I tell people is like, look at an indicator and really like dig down and learn from that indicator. You can get so much more out of, there's depth in all the different indicators, versus just like when you buy a technical analysis package and the RSI is set to 14 day or 14 periods. And
are you at 14 or do you have 13? Am I reading that right?
No, everything that I do is going to be fib based.
Oh, so you have RSI 13.
Yeah, I use
interesting.
I use my moving averages are all fib based. That's why I got a 55 Bollinger Band and a 21 Bollinger Band. I keep everything in fib based when I'm doing my annotations and my analysis. I find more patterns that way. I think that's kind of weird to say, but at least from my end, I find things that really help push me forward in what I do.
When you're walking around the supermarket, do you just see fibs and how they put the food in the shelf? I mean, are you seeing it everywhere, brother, or what?
Dude, that is so funny you say that. My wife thinks I'm crazy sometimes. I'm like, we were out hiking the other day, and we were in the way the hills were formed. I'm like, dude, that's a retracement right there. Look at that. It's like perfectly. It's just
perfect.
stupid stuff like that. Like my mindset. I've been looking at charts so long that I think that's where experience kind of comes in too. Like I can pull up a chart. I see patterns like instantly.
Boom.
It's like, because you're just looking at them so much.
Muscle memory.
You can pull things out of them really quickly.
Yeah.
So when I look at everyday stuff, it's like things just pop out. Like, wow, look at the ratio on that. It's so weird, but
that's good. I mean, you have instinct. You should, when you look at a chart, it should be. I think when you look at a chart, you should have a good sense of what it's going to do. And if you don't, then it's a mixed picture and maybe do nothing. Right? Would you agree with that?
Yeah, I absolutely agree with that. I'm sure you get that too. You'll like pull up a chart and you'll know instantly.
You just feel it. You just see it, and then
Yep, and that's what's kind of nice. Maybe I'll pull up like a Solana chart, pull it up, and I'm like, Nope, not today.
Not today. Not today, but you'll look again later. Like you'll take another look with new information.
Yep.
Wow. All right, man. I think there's a lot here for the audience to digest. I am
Awesome.
I'm very thankful, man. I really appreciate you, Fibo.
I appreciate you, man. Thanks for having me. This was fun. I like talking shop with people that like TA and learn from one another. That's the main thing.
You should see my other interviews. Some of them are like fundamentals, and I'm trying to play along, but I just I don't know what I'm talking about. So it's a little bit easier for me to talk TA. So this was a treat. This is a treat, man.
No, awesome. Thanks for having me, man.
All right, man. So all right, folks, this is Fibo, and all right, appreciate you, brother. All right.
Thanks, man. Thanks for having me.
You got it, brother. All right. How about that? That was awesome. I hope you folks enjoyed that as well. I really learned a lot. I mean, just watching his screen and listening to him, I felt like, man, there's more I can do. There's more I can learn. Just even like how he has his own RSI, everything. And so I love learning from these masters, from these experienced people. And so I hope you enjoyed that. I know I really did. That's Fibo Swanny. He's on Twitter. And of course, Texas West Trading Academy. He's part of that as well. I'm Big Chad's on Twitter. You know that. I am on YouTube at Chad's Trading. This is the long form interview series where I bring in really bright, really smart people in the space that they can teach both of us. We can all learn something from them. So as soon as I upload this video, it's going to be in this playlist. I have more guests coming. So, and also let me know if there's any guests you'd like to see. Also, the Trading Encyclopedia. It's a brand new playlist as of a few months ago. Brand new videos every day. 3-minute videos teaching you professional technical analysis, classical charting, Japanese candlestick theory. Check it out. People are loving the playlist. And so hopefully you will as well. And of course, I am on Bitcoin Live, where I'm a founding analyst. Fibo was a wonderful guest. And Fibo, thanks for coming today, brother. As always, we're going to finish up with a little bit of dancing and we'll go from there. But again, what a wonderful interview. And thank you again. So let's do this. Thank you, everybody. Big Chad's out.